USDA loans can be an incredible way to buy a home with zero money down, but they come with some hidden traps that most people don't see coming. In this video, I'll break down the biggest USDA loan mistakes and how to avoid them. Many buyers assume rural means farmland or that they're not eligible. You can use the USDA eligibility map up front to avoid falling in love with a home that doesn't qualify. Some homes are right on the border of eligibility, so I recommend that every time you see a home you're interested in, you plug the address into the USDA eligibility map. I'll put a link in the description for that. The second mistake is ignoring income limits. USDA has household income caps, which are typically 115% of the area's median income. The total household income is counted, not just the people applying for the loan. This includes second jobs, side gigs, Social Security, and even income from people not on the loan. Bonuses, tips, things like that, all of that counts. Typically, they count the last 2 years for income eligibility. Sometimes they average it out, or sometimes they count the highest year. In the description, I'll include the income eligibility tool so you can check your income. It's important to know that there are some scenarios where your income can be recalculated. For instance, for each child that you have, you can get a $480 deduction. You can also deduct childcare expenses for any children 12 and under. If you have a senior who's 62 or older living with you, you can deduct $400. This might seem like a small amount, but for people who are on the border of being ineligible, these deductions could come in handy. You can go to my website at workwithdang.com for free resources like a USDA Quick Start Home Buying Guide and a Homebuyer's Course. I can help you find a real estate agent in your area. There's more information on my website. The third mistake is thinking you need perfect credit. There's no official minimum score for USDA. You do hear a lot of people talking about having a credit score of 640 or more to qualify for automatic underwriting. However, even if you have a score below 640, you can still qualify for the USDA loan. The only difference is that the lender will need to do manual underwriting. The USDA also accepts alternative credit history. You can use rent history, utility payments, etc. if you don't have traditional credit. Some late payments may be okay, just be prepared to explain them. So if you're getting a USDA guaranteed loan, a lender may want you to have a 680 or higher credit score, for instance. If you're not familiar, there are two types of USDA loans: the guaranteed loan, which is offered through approved private lenders, and the direct loan, which is provided directly by the USDA for lower income borrowers. Some people may assume they don't qualify if they've had credit issues, but that's not always true. I've heard of people getting a USDA loan with credit scores in the 500s. The fourth mistake is not understanding DTI limits. Debt to income ratio, or DTI, is the amount of money that you make versus the amount of money you spend. First, there's the front-end ratio, which is your PITI. P stands for principal, which is the amount you're borrowing for the home. The first I is for interest, which is the fee you pay to the lender for letting you borrow the money. T is for property taxes, and the second I is for homeowners insurance. You can also wrap in other fees like condo fees or homeowners association fees. For the USDA guaranteed loan, they want you to have a front-end ratio of no more than 34%. For the direct loan, it's 33%. Then there's the back-end ratio, which is your PITI plus other debts. Debts that count include the minimum monthly payment on credit cards, student loans, personal loans, car payments, things like that. What doesn't count are bills like electric, phone, internet, etc. Typically, the back-end ratio you'll need for the guaranteed loan is 41%. There are some circumstances where you can go up to a 44% back-end DTI with the guaranteed loan, but you'd need certain compensating factors like having a credit score of 680 or more, and this would be for all applicants on the loan, along with other factors like a larger amount of savings. For the USDA direct loan, the back-end ratio goes up to 41%, but there's no compensating factors to allow you to go higher. Having a high DTI can make it so you're not qualified for the USDA loan, even with great credit. DTI for the USDA loan is less forgiving than with other loans. If you have a higher DTI, it's probably good to reduce your credit card balances or other payments before applying. Mistake number 5 is picking the wrong property. Homes must meet minimum property standards that follow HUD guidelines. Typically, that means there can't be major repairs or safety issues. You can't buy an investment property or multi-units, and usually no fixer-uppers. Buying a home that needs too much work could delay your approval or make it so you can't get approved at all. It's important when you're getting a USDA loan, or really any loan, to get a home inspection. You also want to work with an agent who's familiar with the USDA guidelines. Mistake number 6 is not budgeting for upfront costs. When people think about the USDA loan, they often focus on the zero down payment and think they don't need any money at all, but there are closing costs. Closing costs are typically 2 to 6% of the purchase price. You can get closing costs covered by the seller, or if the home appraises higher than the purchase price through gift funds or with down payment assistance. But you shouldn't rely on any of these because circumstances can change. There are also costs like the home inspection, appraisal, homeowner's insurance, and moving costs. I've heard of buyers who get surprised by these out-of-pocket expenses before closing. Mistake number 7 is assuming it'll be a fast process. USDA loans can take longer to close. This is especially true with the direct loan compared to the guaranteed loan. Typically, the guaranteed loan will take around 30 days to close, maybe a few days longer. Your average transaction usually takes about 30 days. Final approval must go through the USDA office, not just the lender. For the direct loan, it can take much longer. Typically, the USDA Rural Development Office asks for a 90-day close. Beyond that, there can be a waiting list to receive funds. I've heard of some people waiting for 2 or more years until they're able to buy a home with the USDA direct loan. Mistake number 8 is using an inexperienced lender or real estate agent. Not all lenders are USDA approved. This is with the USDA guaranteed loan. You want someone familiar with the process. The same goes for real estate agents. This loan has a lot of nuances. An inexperienced person can cause unnecessary delays or, in extreme cases, loan denials. I typically recommend interviewing 3 lenders when you're trying to choose one. While you're interviewing them, ask how many USDA loans they've done. I'd also ask when the last time was that they did a USDA loan, because the guidelines do get updated. You want to make sure you're working with someone who's up to date. The same goes for real estate agents. Especially if you're going for a USDA direct loan, you'd be surprised how many agents are unfamiliar with the USDA process. Mistake number 9 is not understanding the direct loan process. If you're applying for a USDA direct loan, it can be a little confusing. It's a great program. It can offer lower interest rates than what you'd get on the open market, but the direct loan does have some negatives. The USDA direct loan can run out of funds. Even if you're about to close on a home, the USDA could run out of money, and that could delay your closing. In some states, there can be a very long wait list to get a USDA direct loan. When you first reach out to your local USDA Rural Development Office, I recommend asking what the current wait time is for applicants. I've also heard of people filling out the application wrong, so you might want to look into getting a loan packager, which is someone who helps you apply for the USDA direct loan. You can find loan packagers through local housing nonprofits or agencies that work with the USDA loans. Please like, comment, and subscribe if you've gotten any value from this video. It helps me out a lot.